All right, guys, what is going on? Welcome to Wall Street Wednesday. Only we're doing things a little bit different today. Music is deep today. It's just night drive music. Night drive music. But we're going to do something a little bit different today. We are going to do... Ooh, I thought I lost it. I found it. Unlearning Retailology. Right? Unlearning Retailology. So, didn't have anything else planned. Somebody asked yesterday about, retail concepts and analysis paralysis. I thought I was going to get around to it, and I didn't. I ended up ranting too much yesterday. That's y'all's fault. So, don't let it happen again, chat. So, I went ahead and pushed that for today. So, did you guys like what you learned yesterday? I already had one individual send me a chart, and they Christmas tree already. And I told you guys, you're not allowed to do that. You're not allowed to do that for at least a year. So not till Cinco de Mayo next year. Cinco de Mayo 2027 is when you can start doing that. But you have been banished. You have been not permitted to trade like that. What's good? Willow 2020, Jordan D, Scott, Omar, David, Slowly, Mark, Jorks, G, Eberneth, Felix. Another heavy dad week, but we here doing what we can. Yeah, I get it. That was before I saw your lesson, David. You're banned forever. Good luck to you. Deep stuff yesterday. That precision, yeah. I will eventually make an image for that. I mean, I could probably do it later today, but again, you're just trading every single stage, and you're taking partials at new highs, and you're re-entering on the way up, and or short if you're shorting, you're partialing at new lows and all that stuff. Christmas treeing the chart. I like the stream, so I hope that counts for something. Yeah, I'm trying to get every like I can because you guys don't engage very much, but that's okay. That's okay. Speaking of engagement, can y'all believe I got 7,700 likes on that Instagram post? Can y'all believe? I still can't believe it. I still can't believe that, dude. Like, that's diabolical to me. 7,236. I lied. It just updated. 7,700. 4,900 shares. 5,900 saves. I can't fucking believe that, dude. Like, bro. Sniper entries? Nah, who needs that? Framework? Models? Yeah, who needs that? Oh, but chart colors. Oh, yeah, we're going crazy for the chart colors. Dude. Listen, I don't think you guys understand. I don't think you get it. I've been a mentor for like 8 years now. Teaching concepts, teaching ways of trading, ways of thinking, like all this stuff, dude. And the most viral thing I ever get by far, by like 300%, is a post on chart colors. Like, I don't think you guys realize how demoralizing that like is. That's demoralizing as shit. You care about colors, bro. Colors. Sad to see. Mr. Kesha, it's sad to see. Eric, it's sad to see. H, it's sad to see. Julius, it's sad to see. But it's all, I mean, it's fine, you know, it is what it is. But whatever. Oh well. Oh well. You know, it's kind of like that actor. Think about like your favorite actor, but it's like their most popular movie is their least favorite, and the movie that they like the most is the least favorite, you know? It's kind of like that. It's backwards. But that's social media for ya. So, all right, let's go ahead and get things started. Okay. Unlearning Retailology. So, we have to go back to the basics for a minute. So, mentors, if we can call them those, mentors who trade retail and they teach retail, you know, unless they're profitable, what they're doing is damaging people. They're damaging traders. And it's the type of damage that is not seen for a really, really long time. It's kind of like if you eat cake every day, or, you know, eat like shit every day. A couple weeks goes by, probably won't see a difference. But, you know, 2 years later, you're going to be an FF, right? You're going to be fat, right? And to me, that's what retailology is. Like the retail space, that's what that is. You don't see immediate damage. But with that question I got yesterday or the day before, that's when you see it, right? And so this individual is saying, hey, I'm getting analysis paralysis because I got so much going on. You know, I can see liquidity, but I can see the retail stuff. What was it? The harmonics, ugh, right? Gross. Animal patterns. Wow. Yeah. Let's all get rich trading bat patterns and animal patterns, right? It's crazy. But they're seeing all this stuff on the chart to the point where they're getting analysis paralysis. And that's a problem. And that's the damage I'm talking about. Now, instead of, let's say, coming in brand new or coming in with very minimal experience and getting right into the smart money stuff, they're going to have an easier time because they're not being, you know, dipped into the retail world and the retail space. So they don't have that stuff to overcome. You do. Now you do. So you have to get over this, flag pattern and ABCD, Elliott wave, or whatever indicators you use, yada, yada. You have to now move past that. And that is just more friction. I'll go over friction at some point, but it's kind of a mental model. It's one of those science ones. Friction. It's kind of like your habits, right? If you ever read Atomic Habits by James Clear, wonderful book. And in that book, he talks about, instead of trying to like overcome things, which is difficult, make your environment easier. So instead of making things more difficult and then overcoming those difficult things, you remove the difficult things to make it easier, right? So if you want to quit drinking sodas, then you put water in the fridge. That's reducing friction. You don't put sodas and water in the fridge. Now there's going to be some friction there because now you have to make a decision, soda or water. But if you had removed that soda to begin with, you wouldn't have that decision to make. The decision's already been made for you. It's reducing friction. Retailology versus smart money concepts, you now have to get over these things that you're seeing because your mind, your eyes have been conditioned to see those things, because you quite literally built those neural pathways into your brain to go for those things. Okay? If I, God forbid, but if I died today, right? Clapped, stopped out, done, never see me again. And they took my brain, and if they were able to analyze it and see the neural pathways in my like trading repertoire, that's what they would see. Oh man, this guy is wired to see equal lows. He's wired to see pools of liquidity. He's wired to see ranges and premiums and discounts and market maker model frameworks. That's what he's wired to see. It comes naturally. It's not forced. Okay? What I used to do a decade ago was the very things that I'm telling you like about here. Oh, the Elliott waves, the ABCD, the support and resistance, supply and demand, all that stuff. Which is why if you believe in that stuff, you're going to have a hard time with my content. Okay? Willow might be able to help me out here. You might be able to assist me, but there's a verse in the Bible. No one can serve two masters, for you will love one and despise the other. I believe it's either the Chinese or the Japanese have a proverb like that too. If you chase two rabbits, both will escape. Right? So again, it's this two different worlds. Okay? Kind of like the Dispossessed. Y'all probably didn't read the book anyway, so I don't even know why I brought it up. Two different worlds, right? You cannot put them together. They are opposites. Smart money cannibalizes retail. Retail logic is exploited drastically. That's why it only works sometimes. And that's what the educators do in that realm, is they cherry pick what works, and then they kind of just, shrug off what doesn't work. It's just not good. No, Sully. Again, no one can serve two masters, for you'll love one and despise the other. If you chase two rabbits, both will escape. It's just, it doesn't work like that. They're opposites. Smart money is shorting high, covering low, right? Buy low, sell high. Retail is buying breakouts and getting raped on the way lower. Retail is, oh, bull flag, I'm going to buy it, and then the market goes lower. Smart money is, what is retail doing? Let's do the opposite. That's why these worlds cannot coexist. They cannot exist. And that's why and again, I forgot who asked me, but that's why this individual is having some friction here, because now you're in that space between the two worlds, and you're realizing that it doesn't work. So some of you may not like what I'm going to say here, but I got to say it. So I got some bullet points for you, and then we can go from there. We completely exploded into that liquidity day for me. It's just understanding what has priority for me. It's good to know where liquidity is resting. Smart money bias just has to align, or vice versa. It was Chinese. Thank you, G. Appreciate that. It was good money. Okay. So like I said already, retail concepts are exploited. They only work sometimes. Number two, too much analysis equals analysis paralysis. So think about this for a second. And I think I gave this to you yesterday, but I wonder if somebody ever made a video called the 48 Laws of Trading. And I wonder, because I could be wrong, but I wonder if somebody ever made a law that was based on keeping things simple, right? Law number 11, KISS, right? Keep it simple, stupid. The law of simplicity. The more complex a system, the more mistakes are likely. Learning can be complex, but strategy and risk management can be simplified. So again, if you have analysis paralysis, there's too much going on. You need to simplify what it is that you're doing. Okay? So in the most simplest first principle that I can possibly think of is trade in the direction of opposing liquidity. Do you guys understand? Trading in the direction of opposing liquidity. So what does that mean? It means yesterday we did get that, what was it, 7,300 we got? We got that right before I made the market review. Yeah. Pretty nice, right? Yeah. Somebody knows what they're talking about. Trading in the direction of opposing liquidity is exactly what this was about. We have original consolidation here. We talked about that being manipulation. I tweeted about it for you as well to the world. No charge. Okay. So anything, when we're between that high and this low down here, everything in between this range, the probabilities are we are likely to go higher, not lower. So when we are trading in the direction of not liquidity, opposing liquidity, that is a very key concept. You have to pay attention to the verbiage. Opposing liquidity. When one side gets swept and we have a resting pool on the other side, that's what opposing liquidity is. So when you simply trade in that direction, look what you get. Easy. And that's simple. It's one sentence, okay? Trade in the direction of opposing liquidity. Right? So here, let me make a distinction for you. Okay? You have to learn to trust liquidity, like pools of liquidity. Something like this as an example. You have to trust pools of liquidity more than you do the retail stuff. That's why you're having conflict. You see the retail stuff, you see the liquidity, and you don't know what's going on. You have not learned to trust pools of liquidity more than your retail stuff, and that's why you're holding on to it. This is the friction I was referring to earlier. It's causing you internal conflict. And that's why you're having trouble. You have to learn to trust pools of liquidity. Period. Now here's the more difficult part. And again, this is the answer that I have. You may not like it, but I don't know what to tell you. Unlearning Retailology. No one can serve two masters. We covered that. Rewire your brain's neural pathways. Now, how do you do that? Repetition is key. I keep telling you over and over again, journal, print charts, and study. Journal, print charts, and study. Can you guys put that in the chat real quick? Blow up my chat real quick. You have permission to blow up my chat. Journal, print charts, study. Can we put that in the chat? And thank you, thank you, Jay-Z. Hello to you. I try to have juicy streams. They're not always juicy, but I try. Journal, print charts, study. You do those three things. Journal, print charts, Study. Kesha said print money. Yeah, that's printing money is the byproduct of journaling, printing charts, and studying and actually learning from your mistakes. Okay? Here's the last thing. And this is the part that you might not like. This will take time and cannot be rushed. There is no rushing. You can shorten your learning curve a little bit to a slight degree, yes, maybe. But you, again, rewiring your brain is not something that you can do in a day or 3 days, right? What do they say in like pop psychology culture? It takes a minimum of 21 or 26 days to form a new habit or something like that. You know, when it comes to retail stuff and swapping that out for smart money, 26 days is a fucking joke. Okay. It's more like 260 days, not 20. Add a 0 to that. Okay. You've made, by learning retail stuff, you have made your job now way more difficult than it needs to be. It's think about it like this from a math perspective. Think about it like this. Imagine somebody that has no debt, they have no debt, and they have no money either, so their net worth is basically 0. It's technically poverty. They're poor. But think about it like this. So the person who has $0, right? And they want to try to make, let's say their first, let's say 10,000, right? Which is a wonderful, wonderful thing. Whenever you get your first 10,000, if you don't have that already, it's lovely. Now, imagine for a second that you have another person who they owe the bank or they owe credit cards or whatever, and now they're at a negative net worth. And let's just say I don't know what's easy, $2,500, right? Something like this. We'll just put a person here and a person down here. Okay. My point is, what you want is to get up here. And this person only has a distance from 0 to 10K. The person who knows retail stuff and wants to get into my stuff, who wants to get into the smart money stuff, the elite stuff, right? The best of the best stuff. They're starting down here, and they have that much more of a distance to go. You guys see what I'm, drop a 1 if you guys see what I'm saying. It's easy to understand. This should not be complicated. Now, even though this is a visual perspective and it looks simplified, like mental models, it looks simplified, but you got to realize, bro, the person that is down here has to get past all of that retail stuff and then has to get all the smart money stuff and all of that. So it's just their distance is so much more difficult for them. And I feel for you. I do. But I was able to do it. I didn't start off in the smart money realm. So, you know, but it takes time. This is my 12th year. I think if the math is correct. I started 3 months ago in 2012. Sorry, 2014. So from 14 to 16, I think, yeah, this is my 12th year, the beginning of my 12th year. So that's a long time. That's a long ass time. And that's what people don't like hearing. Well, can I do it in 6 weeks? Can I do it in 6 months? If you're asking me, I'm going to tell you no. I'm going to tell you no. What year did it click and you became profitable? Bro, it did not click overnight. It did not click overnight. And it wasn't in my first or second year, I can tell you that. Or even my third. Omar, what do you mean by best year? Excuse me. So, anyway, that's all that I had for you. It's not a lot, but I think you get the gist of it. It's going to be difficult, but it's going to take a massive amount of work and a very long time to get over the junk and to get into this stuff. And it's why I keep dogging other schools, you know? Yeah, I mean, it's kind of fun, but it's to show you the holes in those schools of thought. I keep showing you over and over again, I don't believe in supply and demand. And yet I'm timing the market unlike any of the S&D traders. Period, point, fucking blank. That's proof. Right? The precision is absolutely disgusting. Tweeting in here saying retracement, then expansion, and then getting a retracement, and then getting expansion. And I told you this is probably our low risk buy of this buy model. And then what do we do overnight? We ran it all the way up. How many moves is that in advance? 1, 2, and then 3 and 4? That's like 4 moves in advance. None of the S&D traders are doing that. Not a fucking one. That's why I dog them like that. If they could do it, they would. That's why I keep showing you this stuff is better. This stuff is better. Over and over and over again. But yeah, this took a long time. Years. The best RR? I don't know. Very disgustingly high, but that doesn't matter. Highest RR it's pointless. Willow said, excuse me. Willow said, I'm going to my 8th year and I just now finally making money worth the ride. There you go. 8 years sounds like a long time, but if you're going to trade for the next 20, then sounds worth it to me. What is the most retail stuff you would suggest to learn? How do I know what concepts that I learned is BS? Okay. I would unlearn it all of it. Chart patterns, animal patterns. And again, no disrespect to anybody. But for me personally, I can only speak for John Fib, but for John Fib specifically, it's indicators as well. All of them. I don't care. It's about, for me, it's about time. It's about price and context. That's all that I care about. I don't care about anything else. If my attention is not on time, it's not on price, and it's not on context, then I am wasting my time. That's what I believe. Okay? And again, this is just me. I'm not telling you what to do. If you like volume, keep it. If you like Bollinger Bands, keep it. It's just, I cannot use that stuff. I just can't. I've tried it. I can't do it. So, David, you know, if you have a question about somebody else, I think it's ideal to ask them directly. I don't see why not. But if you have a question about somebody else, I would ask them directly. So, I don't really have anything else for you. So, what questions do you have? I have tried, and again, for the person that asked me that question, I don't know how long you've been here. I don't know. But for all of the gold snipers in here, Omar, Willow, Eberneth, Eric, Money, Mason. Mason's still here somehow. That's, I don't know how that works. H. Who else? Capitalist, Akinola, Felix. All of the gold snipers in here. How long and how many times over the last 2 years have I been showing you market maker models? If you're a gold sniper, okay, if you're a 12-month and beyond sniper here, let the chat know. We got some new people in here. Let the new people know. They haven't been here that long. But for those of you that have been here a year or longer, who can attest to what I'm saying, how long have I been showing you this stuff? I'm not typing in the chat. My hands aren't on the keyboard. Whatever you guys say is whatever you say. Y'all could say, well, oh, John's full of shit. Oh, you could. If that's what you believe, type it. So let's see what they're saying. Scott, gold member. Hold on, I gotta catch up on the chat before y'all blow it up. You mentioned yesterday that you have to know what to expect in each market maker stage of delivery. Which video is this discussed on? The market maker models masterclass. But you don't have to know about, you don't have to know how to trade every stage, but you should know that they are in order and that they do have certain characteristics. Yes. Doesn't mean you have to trade them. You just have to know about them, because once you know that they're in order and you have manipulation and then this, then you know what's next. Or if you have this, then you know what's after that. That's why this stuff is predictable. And people who say the market can't be predicted are fucking stupid. All due respect, but you're an idiot. You don't get paid to be right. Well, shit, do you get paid to be wrong? How the fuck does that work? Stupid. Sorry, we're not going to clip that one. Maybe we should. I don't know. 8 years sounds like forever, but I'm still young as shit. Debatable. And grateful I put the time in. That's how long people go for a master's degree. That's how I frame it. Yeah, there you go. That's actually a great way to look at it. You know how sometimes I'll tell you, oh, this is PhD level precision? That's what I'm hinting at. It's going to take 4 years, arguably longer, to understand it and to be able to do it. But anyway, let's get back to my point. Mason said weekly. Scott said all the time. Felix said 3 times weekly. Willow said clockwork. Omar said 3 times a week. Capitalist said almost every day for the last couple of years. I would say 2 to 3 times a week minimum. Eric said 400 times. I don't know how you got that number, but that's solid. Miguel said a lot. Look at that. Because I'm drilling this into your head. I'm damn near taking a tattoo gun and tattooing it into your brain. Original consolidation, distribution, redistribution, manipulation, V-shaped reversal, retracement, expansion, accumulation, reaccumulation, seeking liquidity, market maker, buy model, terminus, long on the way up or short on the way down. If you want a Christmas tree, I taught you how to do that yesterday. Short all that shit, buy all that. And take partials at new highs and re-enter, and take partials at new highs and re-enter, and take partials at new highs. Okay, you don't have to do that. But again, I'm not going to hold back the things that I know. Forever, at least. You're eventually going to get it. But if you know this, okay, this right here is the best foundation that I can think of, technical wise. Okay? Oh, RSI, man, fucking RSI, dude. The RSI can be whatever it wants down here. Who cares? The RSI can be oversold in here. It's still going to go higher. All the volume can say, oh, there's going to be shorts here. It's still going to run up higher for that liquidity pull. Again, that's why I can't use that stuff personally. I know that the algorithm, okay, is going to take price above those highs. And the algorithm is not going to reference indicators. The algorithm's not doing that. The algorithm's going to refer to time and price. Context is where we all disagree. Nobody can disagree with time, and nobody can disagree with price. It's the context. Oh, it's supply, it's demand. It's an algorithm. You can believe whatever you want. I believe in an algorithm. And that's why I keep showing you stuff like the market taking pools of liquidity at specific times. The macros. All right? But we could literally, like no shit, we could literally spend hours and hours and hours just on this alone. And when you truly start to see this and you get it, you don't even have to trade it, but you could watch it, right? You could just watch it. Oh, we've got equal highs up here. We got manipulation here. Okay, well then let me pull up this image on one monitor, or maybe on one half of your screen, and put the chart on the other half of the screen or the other monitor, and see if price doesn't do this exact thing. And it's interesting because the first like 3 to 5 times that you do that, it's going to be scary. You're going to feel like you know shit you shouldn't know. These are financial markets. Do you realize that? These are the world's financial markets. These are S&P 500 futures for June contract. And I'm literally tweeting where they're going to go before it goes there. You've seen me do this for a long time. It doesn't faze me anymore. I'm proud of this shit. I know what the fuck is going on. But the first time you do it yourself, and the first time, you know, I wouldn't short this today, by the way. But just imagine for a second that you thought this was a sell model. And you go, okay, well, that was the low risk short, and we crossed 50%. We haven't done that on this chart, but I'm just saying as an example. And you go, okay, we're back into premium. Well, that's an inversion. And then it goes into that inversion and sells off and then runs for the lows. And you're going to go, oh my heavens, I shouldn't know this. This feels illegal. That's exactly how you're going to feel. Now, whenever you do that again, but you actually trade it and you actually short the low risk short and then you hold it for terminus, you're going to realize like, oh, this was the best way to trade this whole time. It was never in the indicators. It was never in the supply and demand stuff. It was in this stuff. It was trading in the direction of opposing liquidity. It's not about getting sniper entries. I mean, I would prefer that. I know you would prefer it too. But it is more important to be on side, meaning it is more important to get the direction than it is to get the entry. Okay? That's what I believe. It is more important to get the direction right than it is to get a sniper entry. You can get a sniper entry in the wrong direction, and that ain't going to do shit for you. Break even, maybe a partial at best. Okay, yeah. You're going to make a lot of money doing that. Shorting and taking partials and then getting stopped out. Oh, yeah. Teeny tiny partials. Yeah, you'll get fucking rich doing that shit. But if you're able to short and actually hold for moves or partial multiple times, that's going to grow your account. Okay? Even if it's late. Like, let's just say this was it, right? And you wanted to short here or even short here for that final move. That may not seem like a lot. It's a scalp. I've shown you a lot of that recently. But that is still good trading, period. So, again, I'm not trying, to start some sort of what is it called? Like a debate or anything or whatever. Whatever you do that works, keep doing what works. But if you see somebody that's doing better consistently, why would you want to stay at where you're at? That doesn't make sense to me. So again, take this image, post it on the wall somewhere, post it on your mini fridge somewhere. I don't know. If you have a job and you work in a cubicle, put it in there. Look at it every day. Put it in the bathroom on the opposite wall of your toilet. So whenever you go on the toilet, you're looking at it and you can see it every day. And you will understand it. And you'll see them on the higher time frames. Not that this is it, but you'll see them on every time frame. And you'll start to see it. You go, oh yeah, that's the consolidation. That's the runaway. That's the manipulation, so on and so forth. The only thing that you probably will struggle with, I mean, at least I did, is time distortion. This is like a time distortion. It's not primary trading hours, it's electronic, and then you have like Asia and overnight, and then you finally get London for some movement. But outside of time distortion, you're going to see this all over the place. And once you see it, you can't unsee it. So anyway, Jojo said, do you plan on updating the SMS first 90 days PDF? Probably. I will. If I do, it'll be, I'll probably scratch that entire thing minus the market reviews. I do want you to go through those, but I would probably do like the new playlist that I've made, the CTAC episodes, the core technical analysis concepts, the CMC episodes, the core mindset concepts, and some of those other playlists that I've made recently. I think that would probably be better, because that 90 days PDF is, I don't know, like 3 years old by now. It's a little dated. British pound 5-minute chart. Ooh, currencies, dude. You like currencies? Good old currencies. Oh, you said sell model. I thought you said buy model. I'm like, buy model? I'm like zooming out trying to see what you're talking about. Are you talking about this? Consolidation, leave it. Or, yeah, back into it, leave it again. Bullish until manipulation. There's your manipulation. Low risk short. First stage, second stage distribution for those lows. Yeah, that's a sell model. Yeah. If that's what you're looking at, yeah, that's beautiful. Euro is, oh, ass. We'll come back over here. Yeah, those lows are beautiful. That consolidation's nice. And yeah, I would agree. You have a mitigation here as well. Right here. High, low, higher, high. That swept liquidity. There's a little bit of time distortion in there, but I would kind of say A-shaped reversal. Expansion higher, expansion lower. Retracement, expansion. See how easy that is? It took me 5 seconds to look at that. It's cake. That's cake. But you wouldn't know it's there unless you look for it. On a naked chart by itself, oh, it looks all right. But when you actually get into the details of it, you realize that this stuff is absolutely disgusting. And that mitigation looks absolutely gorgeous on a 15-minute. That 5-minute was cheeks. But that down candle here, that's my mitigation model for those lows right there. That's disgusting. And that's so easy. That's like 20 pips. Oh, no, I lied. It's 20 level down to like 90 or 80. It's like 35, maybe 40 pips. Easy. Easy. Beautiful. So good work for spotting that one. Money. Good job. Everyone teaches MMM. Is that market maker models that you were trying to say, David? No one made it click for me. Are you saying that no one made it click for you like me? Is that what you're saying? Now, why do you think that is? If everybody teaches it, but yet you finally learned it when you got to me, what does that tell you? It means everybody can sound like they know what they're talking about. Not everybody actually knows what they're talking about. Everybody can sound cool with verbiage and big words. Okay, go trade at the low, go trade at the high before it happens. Go tweet multiple moves in advance. You go do it. I'll follow you if you can do that. But again, you just don't see that. Not a lot. I mean, you see it, of course, but you just don't see it a lot. What do you do when there's possible contradicting market maker models, like a sell model inside of a bigger buy model? Study the higher time frame, watch the low time frame around the stages. You know, to be fair, I really can't say that I've come across something like that. Any time recently, anyway. But I think if I did, I would trust the higher time frame than a lower time frame. I don't think I've seen... Yeah, I don't think I've seen that. I've seen smaller buy models inside of larger buy models and smaller sell models inside of larger sell models. I can't say that I've seen the opposite. Unless it's been a few years. It's a good question, though. But I'm sorry, I can't give you the best answer for that. Trust the higher time frame is what I would go with. And G, what do you mean law from today? Your view on the law from today. What law was today? Wow, 2020. I appreciate your honesty. Look at this shit. The first time I watched your stream with the Trade House during Power Hour, I thought you were full of shit at first. Wow. That's crazy. That's crazy. I need to go cry now. I need to go cry now. But once price went consistently your way, I knew I had to change my mindset and remove the things I learned from retail trading. Oh, see, that's pin-worthy. You had me fucked up in the first half, but that second half brought it home. Look at that. Look at that. Price went consistently your way. Yeah, baby. Love that. Love that. Can you teach us time distortion when you have time? I don't fully understand. Like, me personally, I would not trade during time distortion. I would instead wait for the proper time. Okay, so again, example, right? When everyone said yesterday, I'm not going to say names, but, you know, people yesterday, oh, there's no draw on liquidity. To you. Yeah, to you. You may not know the draw on liquidity, but that doesn't mean there isn't a draw on liquidity. So, sorry, I know. I got to chill with the ego stuff, but again, I'm a flawed man, okay? I'm a flawed man, and I have a lot of fun with this, and I know you can tell. After we closed, everything, like, in my mind, as soon as we close for the day, and as soon as we get, like, our new day gap, like, in, you know, around dinner time, 5 p.m. Central, after that, everything post that, to me, is time distortion. Asia is its own session, but if I were to trade that, I would instead wait for London. Because now I can expect volatility in London. There's 2 a.m. So we trade below it here. And this down candle here. Like that, I could see something being tradable on that. But you see how we just spend so much time in here? Like that is time distortion. Here, pre-market, there's an imbalance there. And then we run at 8:45. Equities open here, trades down into those down candles. Weird and random, and nobody can predict that shit. So those down candles supporting price, sending price higher. Okay, that's real support and resistance. Right? That was the draw. That is tradable in here. But I would not trade like the stuff in here. And I know that looks weird, and most people would not agree with it. They go, oh, you'd rather buy up here than down here? Yes. By trading up here, I'm going to take less drawdown. I'm not going to sit through all this bullshit. So I don't like trading during that. And sometimes like these time distortions can last a lot longer than this, or they may not drift like this. They could just do nothing for a while and then finally go. So I'm not going to teach you how to trade time distortion because I don't do it. I don't know how to. I would rather not. So hopefully that helps. And no, I wouldn't, Jorks. I know I'm behind on the chat a little bit, but Jork said, would you now look for that British pound sell model into a buy model? No. Once Terminus is done, I'm not looking for a reversal. Even if it does happen to do so. You got to realize, okay, think about this. This market, okay, British pound. Already, from the original consolidation up to manipulation, already moved 60 pips. Then from that reversal, outdid that 60 pips to go for those lows. Okay? You know, roughly, give or take. So we move 60 higher, 60, maybe 70 lower. So to anticipate we're going to do another 60 in the same day, I don't see that happening. It could. I just don't see it that way. The markets are only going to move so much in a day. There's only going to be so many moves or so many legs in a day. Now, because it might look like that on a smaller time frame, if you think that's the consolidation and that this is the manipulation, sure. Where then this would be, you know, something like that. I think that's what you're asking me. That could happen. But I don't always look at a terminus like a reversal. I don't look at it. And I haven't even looked at the dollar index. So the short answer is no, I would not. I remember you and IML teaching the gold to euro, gold to British pound. Holy shit, that was a long time ago. But that was cool shit. That was cool stuff. None of your mentors taught you that either, but I did. I know. People hate when I say that. That's why I keep saying it. How do you identify time distortion? If we're consolidating and we're not at like a prime trading time, that to me is time distortion. But you guys have to realize I'm just one person, bro. And I may not always get it right. You know, I might mislabel or you know, assume something is one thing, but it's not. I don't always know. But that's what it is to me. When we're consolidating or drifting outside of prime trading windows, outside of prime times, to me is going to be time distortion. And I don't want to trade during time distortion. And it is deep stuff. Gold to British pound and gold to euro. Yeah, that stuff was really cool. It's a lot to work with, but it's pretty cool. And David, I'm going to be honest, probably not. Probably not. So, All right, well, that's it. Then we'll go ahead and shut it down. We'll go ahead and we'll leave it here. But look, at the end of the day, you have to trust what you're learning from me or what you're learning from other schools of thought. I'm not going to tell you what to trust. I know what I trust. And I only teach you what I trust. So I can't force you to understand this stuff. I can't force you to study this stuff. But I fully believe if you take this, what I've given you, and you can always add or subtract something. If you want to add time windows somewhere, you can. I didn't do that for you, but if you want to look at this, and of course the inverse as well. We haven't looked at this image in a while, but it's the same thing for the sell model as it is for the buy model. It's just inverted. We're going to have consolidation once we leave it. If we get back into it and leave it again, I'm going to be bullish until manipulation. Once we get manipulation, that A-shaped reversal, cool. Now I'm going to start looking for shorts until equal lows, but they've got to be at the right time. Okay? And that is how you're going to take really, really good trades and not take stupid ass shit like some of the stuff you see on Twitter. Oh, inversion is the weakest concept. No, bitch, you're weak because you got it wrong. It ain't the fucking concept. It ain't the market, dumbass. It's you. If you get it wrong, of course it's going to be weak. It ain't going to work. It ain't cookie cutter. That's not how this works, dude. You cannot take an imbalance and trust every imbalance that you see. That is not how this works, bro. Crazy to me. Sorry. That's going to be it. I'll put out a market view tomorrow for the members here. I will see the members again on Friday the 8th for our last live stream of the week. If you are a free viewer, have a good weekend. I'll see you guys on the 11th. And very last thing is don't forget to read, right, this month and next month. Book of the month is The 48 Laws of Power by Robert Greene. Wonderful, wonderful book. Today is the 6th. And law number 6 is court attention at all cost. He tells about some stories of, I think it was like Barnum, P.T. Barnum, the circus guy, and some others. So, interesting stuff. All right. Be blessed. And I will see you next time.
To find a reason not to end it all yourself.